Good afternoon, Michael. Hello, Tina. Hello, Michael. Hello, Tina.
Can you hear me now?
I can hear you now fine.
All right. Hi.
Great, great. You guys are in Missouri, is that right?
Yes.
What part of Missouri?
Buffalo, Missouri. Lewisburg.
Springfield.
All right. I'm in Dallas-Fort Worth area. I live in Arlington, just a few miles away from where the Cowboys don't play football. So that's we're not here to talk about Dallas Cowboys football.
Oh, did you want to talk about the Chiefs?
What if they go three-peat? I mean, that would be the first time in NFL history. That'd be
crazy.
Yeah, they're going to capitalize it on all right.
Yeah. You guys are doing something amazing up there. Andy Reid is pretty special.
Yeah.
He used to torment the Cowboys when he was with the Eagles, and now he's messing with us with the Chiefs. So, okay, so help me understand why we're on this call today. You want to get out of this mortgage. What is your motivating factor or factors?
Well, one, I'm 70 years old. That motivates me. This is the first time in our life we've ever been in this quality of a financial situation. And to be able to do something with that to make it even better is kind of what we're looking forward to. Now, we do have household renovations we want to do. So initially we were looking at, financing for, redoing our house. And then we came across the RYU, and you guys have taken it from there. You've stoked our interest.
Well, I'm glad. So help me understand. So it looks like, let me make sure that we have the same goals. I think your goals are threefold. One is to replace your mortgage as quickly as you can, as cheaply as you can, but also get access to capital so you can put your hands on money and start investing in other properties, rental properties that'll start paying you money.
Right.
Then when they start paying you money, maybe you use a big portion of that to start fixing up your existing house.
Yeah.
That's probably the smart move with money, because if we get you access to capital and you blow it on just enhancing your own house, you haven't gone out and purchased what we call IPAs, or income producing assets.
Sure.
And I'm 64, so I see retirement as well. So I'm looking for many IPAs too, so that when I do stop working, my lifestyle doesn't have to stop or modified in any way. So are we kind of close?
Absolutely. We need that other stream of income, and we're looking forward to doing that. And we're willing to wait on our house renovations for a while. It's only taken us 4 years to get where we're at. And we had a 680 credit score, and we bought the house with that, and we are at 2.87%, which is really good. We just kind of fell into it, and it allowed us to become financially stable where we're at now. But that I can't see lasting too long if we don't do something about it now, because the changes that are happening, everything just continues to suck more money out of your pocket. And we've got no return on anything that we've got, you know what I'm saying, except for the house. But we are debt free with the exception of the mortgage.
All right. So let's say we're able to knock out the mortgage. What are the, so that you fill in the blank, like so that you can access capital is one, retire far more comfortably is two, be debt free is three. Do you want to travel as well? Is that part of what's going to be on the other side of this?
There will probably be travel involved. That really depends on how we turn this around and what we're seeing as far as the ability to do that. We've never been able to travel thus far, because it's always something bigger and more demanding on our money. So we've never been able to even plan, any kind of lengthy vacation more than a couple of days. So we'd like to kind of get out there.
Okay, all right. So, do you have kids that you want to leave a legacy for? Or are you guys childless? What's going
We've
on?
got 9 children, 12 total.
Wow. Okay, so you definitely want to leave a legacy behind. Okay, well, that's great. So, all right, let me, I think I have a better idea of where you guys are going. So I'm going to share my screen with you. You had a nice call with Ben, I believe. Ben was on the call with you on the discovery call where he looked at your finances.
Is that Ben?
Yes.
Yeah.
Okay.
Yep.
All right, so I'm going to share my screen just to make sure that we're looking at the right numbers here. Let's see here just a second. Let me come back over here. Okay. All right. Okay, so here's what we talked about. We started the conversation with just talking about your goals.
Uh-huh.
Goal is to knock out the mortgage as quickly as we can with a minimal cost. And so that you fill in the blanks here are so that you can get access to capital, retire
Correct.
more comfortably, be debt free, but also enable you to travel if you'd like, and also leave a legacy behind. Debt free legacy. But ideally, I think the vision might include having multiple streams of income or multiple IPAs, income producing assets, so that long after you're gone, your kids could be enhanced with other income to benefit.
Right.
Well,
Yeah.
that's what I'm looking for. I've got 4 kids and 11 grandkids, so I'm kind of in the same boat. A much smaller boat, granted. I mean, guys are way ahead of me in numbers, but I kind of have the same mindset. Does this make this kind of line up with where you guys are?
Yes, absolutely.
All right. So the potential we talked about is or actually you and Ben talked about is you're going to be paying almost 93K of interest over the next 26 years, resulting in an interest percentage of 42%. Now you have a mortgage rate of 2.87 or something like that. Is that right?
Yes.
Okay. Now, do you understand why I didn't put 2.87 on the screen? Instead, it's ballooned up to 42%. Do you understand why that is?
Yes.
Okay. So you understand compound interest and the horrible model that is and why you want to get out of that now. I heard you say, Michael, that you've got a good mortgage, a good rate,
Mhm.
that's lower than 3. And I hear what you're saying. It's good compared to other rates, especially people last year or so. I've been talking to people that have 7.5, 6.5, some even.
Right.
So that's comparison to others, but understand that the mortgage you have right now really burning your financial house down because of compound interest and because it's being stretched out so long on you.
Correct. Yeah.
We're going to be able to save you $77,000 just by converting your compound interest note into a simple interest note. Then there's some financial damage going on here. Would you all agree?
Yes.
Okay. All right. So I like to get people out of the mindset of thinking that their mortgage is good for good's sake, and it's really not. It's good compared to your buddy down the street that has 6.5 and your buddy across the street who has 7.5, but your house is still burning down because of the compound interest. Now,
Well, he just meant that it's good for a mortgage.
Yeah.
well, for a mortgage, yeah, that's right. That's right. That's right. Less of your financial house is on fire, but it's still on fire.
Right.
That's the way I like to look at these things. And please, I'm glad to see you do that. Take all the pictures you want of these screens.
Mm-hmm.
No problem with that. So instead of paying about 93,000 in interest over 26 years, our conservative entry-level strategy model gets you out at 15.7K of interest in about 4.5 years, dropping your total interest percentage all the way down to 7% from 42.
Right.
Main reason is we're able to swap big blocks of money, compound interest, for simple interest. And I mean, if it wasn't for compound interest, we wouldn't be on the phone right now.
Right.
Because you'd be very happy quietly paying your little 3.5 or 3% simple
Absolutely. Yeah.
mortgage and paying 97% principal. You're like, I hope nobody discovers that's what we're doing because great deal. Nobody else has that, I mean,
Right.
be a great deal, but you don't have that. So what we're going to do is we're going to save you 21 and a half years of mortgage payments and save you also 77K in mortgage interest and get all this done in about 4.5 years or so, as opposed
Right.
to 6. Now, this means that you guys have got to step up and take action and work with us. And this is a done with you system.
Right.
We're going to coach you. I compare it to the two of you want to go climb Mount Everest. Well, the two of you would never go climb Mount Everest on your own. You would hire a guide company to take you up Mount Everest that's done it many, many years over many, many journeys, many, many expeditions, successful expeditions. That's kind of what we are.
Right.
Um, so we sent you a video, a 12-minute video. Did y'all have a chance to take a look at that?
Yes.
Okay. In that video, we talk about what our mission is. It's all about transforming your financial life. Now, we start with your mortgage because that's the biggest line item you have in your budget. Is that true for you too as well?
That's what we have. Yeah.
Okay, so if we can get that
Now,
knocked out, then that frees up that money for y'all to do other things. If you want to pour that into a retirement package, we even have a separate package called Replace Your Retirement that you can get on an advisor call with a retirement coach, and he can walk you through what we have for you, and we can compare and contrast it with what you have already with retirement. Kind of like what you did with your mortgage. When you got on the call with Ben, you said, hey, here's what I've got with my mortgage. Can you do better? And he was able to step up, show you some numbers and say, yes, we can do far better. But we also have packages, Replace Your Dollar, which is all about the stock market, and Replace Your Employer is all about high dollar real estate investing. So we have all these different packages, but today we're going to talk about our flagship product, the Replace Your Mortgage package.
okay. All right.
Because we're all about helping the two of you really get to what we call true financial freedom. Now, what does that mean? Well, the way I look at financial freedom is this. Yes, we're going to knock out your mortgage, but we want to put you on a path to not only knocking out your mortgage to where you can actually see financial freedom, to where now, if you chose to stop working, you could actually do that and still maintain your lifestyle or maybe even upgrade your lifestyle, because now you've got multiple IPAs or income producing assets like rental properties paying you money
Right.
without you having to do the work. That's what we call financial freedom. So we're going to talk about those two things.
Okay.
How do we get you
Jim,
freedom? Go ahead,
you
Tina.
should know, he's been retired for about 30 years now. So our income that we have now is retirement income.
Wow. Okay. Well, good for you. Then we need to really
It's been a haul, but my
Because the two of
financial
you-
wizard here is the one that's managed to make it all happen.
Well, the two of you look so young. You've fooled me here. So no more fooling Jim. How about that? Well, I mean, the bottom line is to enhance the retirement now, right? Is to
Yep.
make sure that we can expand on it and then leave that great legacy for the kids. So
Right.
how do we get you to financial freedom? We're going to knock out this mortgage. Then we're going to show you how our tool, our system, our strategy is going to get you access to capital to start purchasing income producing assets. In other words, things that make you money, like rental properties. It doesn't have to be rental properties, but I'll mention those frequently because most of our clients have chosen that route because they've knocked out their mortgage with this strategy, and they're like, hey, that was easy. I can go out and start purchasing other homes with this new tool that Replace Your Mortgage helped me create, and I
Right.
touch another mortgage for the rest of my life. That's our goal.
Right. That's my goal. I don't even want to see it. I don't want to see a mortgage on a car. I've been driving used cars for years now, and we've been so pleased with not having car payments.
Yeah,
I gotta answer this.
go ahead.
Hello? Why?
It's our kid asking for money.
Okay, stand by. It's coming at you. Bye.
Did you hear that, Jim?
Yes, I did. I feel for you.
It was only $3 though, so it wasn't so bad.
Okay, good. So we're all about helping you not only knock out the mortgage, but get you to a point where you can have access to capital. And that's a big deal, not only for enabling you to buy IPAs or income producing assets, but if one of you, the two of you get sick, it would be great to have what I call lean in money or lean back on money, so that if the surgeon says, we need to do surgery right now, it's time sensitive, and you say, fine, go ahead. He'll say, but my fee is $50K. You'd be able to say, I can cover that without having to worry if health insurance is going to cover it, or have to run down to the bank and say, hey, can you
Right.
loan me $50K for chemo or whatever it is that you need the money for? That
Yep.
gives you lean back money. And I love that fact too. All right.
Well,
So
you know, we have another situation, whereas recently we did a thing because I aged out of my insurance policy, I had to get a new insurance policy. We had home visit going on and phone line going on, and they made all these promises for immediate coverage. And we're almost 4 months into it now, and they dropped the ball. And now I have no life insurance. So I would like to, and the wife has actually worked on that, nesting up what would be considered that policy in a cash amount that we can get a hold of if needed. Right. And we've got that now. So I'm not looking at getting that insurance policy or any other one if I can.
self-insure.
Exactly.
Yeah. That's really smart. I love how you're thinking ahead of the financial game. That's really, really smart. And, you know, we're going to even help you do more of that, because we're going to give you access to a lot more capital that will help you self-insure even more.
Okay.
Yeah, I hear you. About 10 years ago, I aged out of my life insurance policy that was a $3 million policy. I kept thinking, well, if I go, Denise will be just fine.
Mm-hmm.
Now I couldn't get any more than about $750K, and it still cost me $130 a month.
Right.
Before, I was paying $22 a month because I bought that policy when I was 26 or something. Anyway, insurance, we're not trying to talk about insurance necessarily, although I'm glad you brought that up, because this is about self-insuring. If we can get you access to enough capital, then you can lean back and go, you know what, honey, we don't need that life insurance that we thought we did necessarily. So
Right. It's just another monthly mortgage.
right. And that's money down a rat hole for sure.
It
Okay.
is.
Video, we talk about the fact that the mortgage, that word means death pledge. Mort means death. If you go to a mortician or a mortuary, that person
Right.
deals with death. Gage is another word it's a French word for pledge. So when you guys sign that mortgage, I don't think that the title officer said, okay, it's time to sign your death pledge. They didn't call it that. Right. That, you know what, where that came from, interestingly enough, I did some digging. Back when they started mortgages back in 1913 with the introduction of the Federal Reserve Bank, the average life expectancy was around 51. So let's say Michael is a 21-year-old strapping young man. He says, Dad, it's time for me to start my own farm. He says, great, go on down to the bank, get yourself a death pledge. And so you get a 30-year death pledge. You'd work the farm, work it. And at 51, you'd keel over and die. That's not good. We liked Michael, but hey, he bought the farm. That's where that you bought
and somebody else's.
Yeah, you bought the farm. I'm sad Daddy's gone, but we don't have a mortgage. That's good. Thanks, Dad, for buying the farm for us. So that's where that term came from. And the two big problems with every mortgage, and you guys feel this already, is problem one, it's closed-ended. When you guys make a mortgage payment, I got some play money here. This is actually $10,000. This is $100 bills I got from Amazon for $8.23, but it looks pretty real on Zoom, doesn't it?
Yep.
Let's pretend like this represents a mortgage payment. You make a mortgage payment. When you do that, your money disappears into the bank vault, never to be seen again unless you refinance or sell your house. It's gone, right?
Right.
It's closed-ended. You don't have access to your money. The second big problem is it's compound interest, right? Now, you said you understand the massive difference of paying compound interest versus simple interest.
Yeah.
You know, if you had a simple interest mortgage, boy, we would not be on the phone because you'd be just in the background trying to make sure nobody noticed.
Right.
So instead of this horrible death pledge, what I have to show you today is what I call our life pledge. Our whole solution that you'll be investing in is called a life pledge because once you see how powerful it is, I think for the rest of your life, you'll pledge to always use this tool and not the mortgage because this is based on simple interest in an open-ended environment. Right now, when
Right.
your money flows into the bank, you can't get your hands on it. It's gone. With this model, when your money flows into this account, you can always get your hands on it. So that's a big difference. And plus, you're paying now simple interest. And again, the whole visual metaphor that I'd like to use is we're swapping out a compound interest closed-ended instrument for an open-ended simple interest. This is much easier to pay. You have a lot more flexibility because you're paying off a line of credit, not a static fixed mortgage where,
And a line of interest. Yeah.
well, yeah, and if you stop making payments for a couple of months, they will come take your house. That happened to me in 2010. That's why I joined these guys back last summer, because in 2010 I lost my house. And I get,
We did too.
yeah. So you know how dangerous these things are and how damaging they are. We got to get you out of it. Even if you
Yeah.
have a low rate, I get that, but it's still a bad thing. If I'm going to save you 77K, your mortgage is not good.
Right.
So, all right. So that's what we've got for you today. Now, what do? Well, we help people acquire the right line of credit bank. Right now, do you have a line of credit right now?
Sure.
Okay, so you know how they work.
Yeah.
Basically, is it a HELOC designed to do?
No, I guess we don't have line. What we have is a line of credit cards that we're not using, but
Okay, that's different. This
Okay.
is apples and oranges.
no, I don't have a bank line of credit. No.
Okay, all right. A bank line of credit is where the bank is going to extend to you a block of money. Usually it's around 10K. They
Mhm.
drop 10K into a brand new checking account for you, but you don't have to pay any of it until you start using some of it.
Right.
And that's a great thing. It's better than a loan because when they give you a $10,000 loan, you start paying the minute it hits your account or it hits your hands, right?
Right.
Time based.
And
This,
then it's compounded.
yeah. Well, sometimes you have simple interest loans, but here, this line of credit, it's based on when you use it. So it could
Right.
sit there 4 or 5 years for free. It could sit in your account and they wouldn't charge you anything.
Okay.
The way we use this is we get you approved with one of our best banks. Now, we have been doing this 10 years. We've been in business since 2014. And in that time, we've tried to qualify over 1,400 different banks to come join us in our exclusive bank partnership program.
Hmm.
Now, what's interesting and kind of depressing is that we've had to disqualify 1,300 banks
Right.
because they're not qualified. They don't understand lines of credit well enough. They certainly can't help our clients knock out a mortgage with one. And
Right.
the third thing, maybe the worst thing, is that they report your line of credit to the credit bureaus incorrectly, thereby damaging your credit score. And you guys have just moved your credit score from 680 to what was it?
800.
800. You don't want to mess with it now, right?
Right.
So what we've got for you today, access to all of our banks. We have 100 banks. You and the coach are going to sit down and figure out which bank makes the most sense for Michael and Tina to go apply to. And those banks are going to bend over backwards to give you the best possible rate, the best possible terms and policies and closing costs, all those things. Closing costs on a line of credit are typically less than 750. Many of our banks have no closing costs.
Okay.
But what you're going to do is we're going to swap out eventually this mortgage for a line of credit. And what we'll do is until you get to the point where you can qualify for the first position line of credit, that's where our bank, our partner bank or your bank is going to drop 90% of the value of your home into your account. Until we get you there, we're going to use a block of $10,000 to just start chunking down. And we'll get to that here in just a minute. So the first thing we do is we partner you with the right bank. That's the acquire part. We help you correctly structure this line of credit so that the line of credit will accomplish your goals of what? Knock out your mortgage as quickly as possible, as cheaply as possible, and give you access to capital. And it's got to be structured properly, because if it's not, you'll just have another bad piece of debt.
Right.
Dude, you've already got one of those. It's called a mortgage. You don't want two of them. What you
Right.
is you want a perfectly designed line of credit that's going to come over here and knock out this mortgage eventually and potentially cut it down in one day. And I'll talk about how that's going to work here in just a minute. And the last thing we do is we have hours and hours of training where we'll make the two of you financial gurus.
Okay.
Because right now, one of the things you're looking at is you're looking at a mortgage as, I have a low rate, it's a good mortgage. And I understand what you're saying. We'll teach you why every mortgage is bad, why every mortgage is dangerous, why every mortgage is damaging. We'll teach you about sweep accounts and promo rate stacking. In other words, what we're going to do is get you to the point where, especially with the two of you, you'll be able to counsel and mentor your kids, your adult kids, and go, you know what? You've got a 3% mortgage and you think that's great, but let me help you understand why you can do a lot better.
Right.
Out from underneath that. And just you'll be the financial guru of your spheres of influence. So those are the three things we do. We partner you with the right bank. We help you structure this line of credit. Then we teach you how to leverage this line of credit so that it benefits you the rest of your life. And you can start teaching others how to do this as well.
Okay.
So we have two primary strategies. I've already kind of hit the high points of them, but let's just talk about them. The first one is called the chunk down strategy. Now we're just using a block of typically about $10,000. In fact, those dollar amounts we showed you earlier, way back right here, these amounts are assuming a $10,000 block of money, only 10,000, and an 8.5% HELOC rate, which is a lot higher than what we're getting right now. Our partner banks are doing about 6.5 right now. It's 2 points higher. So 8.5% using a block of $10,000. Look at the damage we can do to your mortgage and how much time we can save you on a conservative basis. I say conservative basis because these numbers will only get better for you as you go. Because once you get into the program, the coach is going to go, well, you know what? Our rates are closer to 6.5%, not 8.5%. So you'll actually be paying less in interest, less time. That total interest percentage will be smaller, and you'll be saving more money in mortgage interest and probably more time. Just based on that, I'm just telling you, it's going to get better from here. But we like to under promise and over deliver. This is the entry level strategy. And again, the entry level strategy goes like this. We get you qualified with one of our banks. They drop $10,000 into this new checking account. All of your both of your salaries or your income, whatever it is, retirement income, is swept into this account. And what they'll do is on top of that, of your own money, they'll drop another $10,000 in there. Then what you do is your normal mortgage payment goes out, but on top of it, 1 month, when you get that $10,000, you send a $10,000 check against your mortgage. Well, the mortgage company gets your normal payments. As good old Michael and Tina, they're so faithful in paying their mortgage payment on time. Whoa, what is this? They just paid us an extra 10K. Hey, boss, what do I do with this? Well, he's going to say, all you can do is apply that to the principal because we already got our interest. So now your equity jacks up by 10, basically. Right. And you've clawed back about 18 months of those payments on that long-term mortgage. Just $10,000 block. The next 3 or 4 months, you make normal mortgage payments, just like you did before. While you're doing that, you've got a little bit of excess cash in here. The difference between your income and your expenses is called the excess cash you talked about with Ben. You'll use a portion of that to pay back the interest on the 10K. Once that's satisfied, they drop another 10,000 in, and you start the whole process all over again. So the bottom line, how it works is every maybe 3 or 4 months, you're throwing 10K at that mortgage. Boom, boom. You're taking chunks out of the mortgage. This is why we call it the chunk down strategy. Now, let me show you the one that everybody's going for. This is the knockdown strategy. This is where eventually you'll get qualified for the first position line of credit. This is where you'll have enough money to write one check and knock out the entire mortgage. That's hence the name first position HELOC, home equity line of credit, first position, because it takes over the mortgage right now, which has first position, right? Your lien on your house is your mortgage. We're going to kill that, and in its place, we're going to put this first position HELOC. That's where the magic happens, because in one check, you can write one check and swap out all this compound interest with simple interest. That's where we're eventually taking you. That's where the magic happens. Now let's look at this with your specific numbers so this can make more sense to Michael and Tina.
All right.
The current market value of your house is approximately $360K, right?
Mm-hmm.
Right. And eventually, and the coach can tell you when this will happen. I can't tell you, Ben couldn't tell you. After the coach sits down and looks at all of your finances, he'll be able to give you a better idea of when this will happen. But I imagine it won't take long to get you qualified for this one. So the 360K is your market value. Once you get qualified for this first position, they give you, or they advance to you 90%. They drop 90% of the value of your home. In this case, what's 90% of 360? It's 324K.
Okay.
Oh, 324K goes, boop, goes into your account. You look over at your wife, says, Tina, we just got $324,000 dumped into our checking account. What do you think we should do with it? And Tina's going to say, oh, I don't know. Why don't we write one check for $221,000 and knock out that stupid mortgage? Hey, good plan. Give that lady a cigar. She wins the prize. That is what you do. So even if it happened today, you'd write a single check for $221. That knocks out your mortgage. But look at what I got, that circled number, the 103. The difference between 324 and 221 is 103. You would have $203,000 left in your account that you could do whatever you want with. This is where we start to see blocks of accessible capital you can get your hands on to start purchasing other properties like IPAs, income producing assets, things that make you money like rental properties. Now, as you pay back the 221K at simple interest, you'll eventually get that line of credit amount back up to 324K. So now, after you pay that off, two good things happen. The bank, the partner bank who has been holding the title of your house ever since you wrote a $221,000 check against your mortgage, they have title. They give it to you and say, congratulations, you're the proud owner of your house. You own it debt-free. Secondly, you'll look down at your checking account and go, whoa, we have $324,000 that we can do something with. Maybe we can put $100,000 down on 3 different houses, have renters move in. Now we've got income coming in, 3 different more streams of income. And the more streams of income you have coming in, the more that bank will go, hey, Bill, you see Michael and Tina, they got a lot more income coming in. Maybe we should offer to give them more line of credit so you can go out and purchase another house. That's how our clients are able to get 10, 20, 50 houses that are paying them on a monthly basis, 50 streams of income. That's retirement changing income. Wouldn't you agree?
Yes. Now, how does that work if you buy and sell? Rather than renting. I mean, I understand it's short-term, one-time type payments, but does it work to flip, or is it specifically in the rental division?
No, it works to flip as well. I mean, you want to stay away from mortgages no matter if you're flipping or renting. It doesn't matter.
All right.
The money ripoff is the same on both sides. You want to put yourself in a much better position whether you're flipping or renting.
Right.
Access to capital, you're going to need money to fix that roof and to fix that kitchen that was abused by the previous tenants or whatever.
Yeah, 50 years ago.
to have capital because we're going to get you access to capital that you don't have right now when you're dancing with this silly mortgage.
Right.
Okay, so does this make sense to you? We have the chunk down strategy, taking big chunks out of it, and then we have the knockdown. The best analogy I can make is, have you guys ever been out to California and seen those giant sequoia trees, those huge, huge trees?
I lived in them. Yeah.
Okay, so you know what I'm talking about. The chunk down is where you have a big axe, and every couple of months you're taking a big chunk out of the trunk of that tree.
Hmm.
4.5 years, eventually the sequoia will be knocked down because you've taken all those chunks out of the trunk. Now, this strategy is the chainsaw. You go right through it, and one day the whole thing is knocked down. So chunk down and the knockdown. That's the big picture of both these strategies.
So how hard is it to get a first position HELOC?
Well, it's like, it's exactly the same as to get qualified for the 10,000, except for everything's a little bit higher, right?
Okay.
Most specifically, it's your equity. Right now, you guys are getting close to a 50% equity position, right? Because
Right.
oh, one, okay. So I'm thinking that in about 3 years, let's just play with some numbers here. Let's just say in 3 years, this number is down to 124 is what you owe. So now this number is sitting at 200. So the more equity you throw at this, then the less obviously later on you'll have to pay. So let's say in 2 or 3 years, you look down and you go, hey, coach, you think we can qualify? And he'll be able to tell you, say, yeah, you know what? I think we can. Let's go ahead and go for it. Once they qualify you for it, they're going to drop that same 324 into your account unless your market value goes up or something. Let's just say it doesn't, it stays put. They drop 324 in there. Now you only owe 124 in 3 years. That would leave you 200K that you could get your hands on to start doing some things with. You see that?
Right.
And as you're paying back the 124, it's simple interest, not the compound, but simple. Now you've got your hands back on $324,000 that you can use to get other IPAs, and I would counsel you to get as many income producing assets and then let that income start funding fixing up the house that you're looking to do, so that the income coming in from your other resources is funding your new kitchen and fixing up that bedroom or knocking out that wall or fixing the roof or whatever you want to do with your house. Tina, does that make sense? You okay? I can't see you.
Yep.
Okay.
That makes perfect sense.
All right. So we're all about not only knocking out the mortgage, but also putting you in a position so that if you want to, you can start purchasing other homes. Now, what we do is important, but I think since you've never seen our Better Business Bureau A+ rating, is that right? You don't know about us?
I know you have one.
Okay, good. Who told you that? Was that Ben or?
That was on the website that I went to.
Good. So you've done some due diligence on us.
Yep.
You've seen our client video testimonials with our clients crowing about how we're changing their lives and all that kind of stuff. Okay.
Right.
All right. And maybe you've seen our YouTube channel. So all I'm saying is you're very curious about, well, okay, Jim, I'm getting ready to hand over part control of our mortgage here. That covers the two most important material things in our lives, our house and our money. Now I said material, I didn't say people, but the two most important material things in your life right now involve your house and your money. Would you agree?
Yes.
Okay, so now you're like, well, wait a minute, Jim, what have you guys done? Well, over the last 10 years we've been in business, we have over 6,000 successful mortgage replacements. So it's kind of like if you're looking to go up Everest, we've summited 6,000 times.
Right.
And we've done it over the last 10 years. We started in 2014. Our founder, Michael Lush, was a former SVP of a national mortgage company, and he heard of these people that were knocking out mortgages with HELOCs, and he didn't believe it was possible. So he tried it himself, and he knocked his mortgage out in 3 years. Then he realized what abuse was being done by his own industry, and he got out of it and said, I want to help families from now on. I want to bless families by teaching them how to get out of these. and free up a lot of capital to make their lives that much better.
Yeah.
Okay, so
This kind of reminds me of, when we got married, we bought into timeshare out in Hawaii, and we paid that timeshare off, but we never got back to Hawaii to use it, and we only used it twice in the 10 years that we had it, and we sold it. Okay. But there was no light at the end of that tunnel as to what they were going to charge us for the life of having that. And then it was connected to every member of our family to pay for something that is not being used.
right.
So we got out from under that, and it's such a debt relief because every year was a new surprise, And so we were really relieved to get out from under that. It saved us a lot of money, but it cost us 3 times to finally get out of it.
Right, right, right. And to get out from under debt is a great thing, but we're really looking for client partners that are looking to go beyond that. We want people not just wanting to get debt free, but we want to get people into financial freedom, and we want people that are motivated to do that, to leave those legacies, to leave income producing assets and access to capital. So how do we get you on board? Well, step one is you'll go through the education so that you'll be far more financially literate to be able to talk to the coach. Once you talk to the coach, you'll bring your financial assets together, your blueprints, and say, okay, coach, we don't have anything but a mortgage, but here's what we've got going. Here's how much we have left, et cetera, et cetera. And then he's going to say, okay, I have a better idea of what you're trying to do. It looks like we're going to have a strategy of doing the entry-level strategy for maybe 3 years, and then we'll do the advanced strategy from that point on. I'm not sure how that's going to go. That'll be between you and your coach, but you'll design the strategy. I have 2 more. Wait to take a picture because I got 2 more things to show you. Then you take a picture. So we're going to design the strategy. Then once he figures out what you guys are trying to do and how fast you're trying to do it, he'll say, okay, out of the 100 banks we have that are bank partners, Michael, Tina, go call these 3 and let me know which one aligns with you best. So you call them, just explain what you're trying to do. Once you tell them you're with Replace Your Mortgage, they're going to perk up and they're going to say, we're going to take great care of you. Why is that? Because they didn't have to go advertise to find you. They didn't even qualify you. We brought Michael and Tina on a silver platter to their front door and said, Bank XYZ, I'd like to introduce you to Michael and Tina. These are incredibly qualified clients for you. All you have to do is give them fantastic service, give them as many things on their checklist that they want in their line of credit. They want a fixed rate. They want a 10-year draw period. They want these terms, these policies. They want no closing costs. Give them as many of those things as possible, and they're going to bend over backwards to give that to you. If you try to do this on your own, here's what would happen. The bank is going to say, yeah, we'll give you a $10,000 line of credit. Sure. Here's the term. Here's the policy. Here's the draw period. And it's going to benefit them. They have no motivation to be competitive because you walked into their bank.
Right.
But with us, our banks are going to know they've got 99 other banks pounding on that door to get in to take care of Michael and Tina.
Okay.
And they better in it, because if they don't, the coach is going to go, nope, that's not good enough. Let's go to the next bank. We can do better than what they're offering you.
Okay.
That's a powerful part of our system. So then
I like it.
That you get the list, and then you go back and make your application to the bank. They're going to come back and give you a great proposal. You'll take that back to the coach. The coach will say, you know what, that's a good deal. Go ahead and take it. You'll take it. And all this takes about 4 to 6 weeks from now. If you join today or tomorrow, whenever, it's about a 4 to 6 week time period, because after that, you don't need the coach anymore, and you don't need the bank anymore, the bank list anymore, because you got this great relationship with one of our partner banks now. And
Okay.
you don't need the coach anymore because he's done his work. Okay, there's 10 other things that you get with our system beyond knocking out your mortgage and getting access to capital. And one is the financial education. We're going to give you great education. We're going to help you be gurus of your own money, teach you how to make more and spend less of it. We're going to give you a coach. I've already talked about this, licensed loan underwriter who's going to walk you through this whole process. He's the guy that's walking up Everest with you.
Okay.
We're going to give you a custom strategy. You're going to have a PDF he'll email to you after you work through it. You'll print it out, stick it on your refrigerator with a magnet and say, okay, Tina, here's the plan. We're going to do this for 36 months. And then from here on out, we're going to be qualified for the first position or whatever. But you're going to have a plan. You know, the Bible talks about the people without a vision will perish. Well, we give you that vision. And then we teach you cash flow management, because the better you get at managing your cash flow, the less you'll be paying back the bank, the line of credit on your interest. That may sound confusing to you right now, but it's okay. The education will teach you why that's going to make sense, because the way you pay off a line of credit is so different than the way you pay off a mortgage. With a mortgage, it's locked in. It's either pay or lose your house. Any questions? Well, with our banks, it's like, oh, okay, you got a financial blip, something happened to your retirement income, call the bank, say, hey, we need about 3 months to get things squared away. Can we make these payment adjustments? Oh, sure. Thanks for calling. It's really incredible as to how flexible these banks are. Why? Because they want to please not only you, they want to please us. They don't want to lose their position on our list.
Right.
Because they get free clients. And they love that. They don't have to go find you or even qualify you. All these things are going to start giving you a new mindset towards your money. I think we've been talking 45 minutes. I think your mindset's already starting to shift a little bit from, man, the rest of our lives, we need to have access to a tool like this that's going to only charge us simple and not compound interest. We've got to get out of this thing, right? And then we give you access to one of the best banks that's going to give you a great tool. It's going to give you access to capital. Why is that important? Well, we talked about this a little bit. I think, did I mention the medical emergency? Right. It covers you in case, God forbid, one of you gets into a car wreck today and you need brain surgery, and the neurosurgeon comes to your bedside and says, we need to operate right now. You say, fine, what are you waiting for? Let's go. Well, yeah, my fee is $75K. Can you pay it? You need to be able to say, yeah, we got that covered. Let's go. Right. So that's one thing. That's on the negative side. But on the positive side, that money is there to also provide for you if you want to start purchasing income producing assets, the things that make you money. And the last thing is we give you access to our Facebook group of clients where you can get in there, introduce yourself, say, hi, Michael and Tina here in Missouri. Here's what we've got going on. And we have a shared goal. We talked last night. We have a shared goal of, in 2 years, we want to have 10 new rental properties. Has anybody done that in 2 years? Oh, yeah, I've done it. I'd be glad to get on a Zoom call and talk to you about how we did it.
Okay.
Now you get to talk to other people that are doing the same thing to their house at the same time, in addition to being able to talk to a coach that's done it hundreds of times with these people. But there's some value, I think, in being able to talk to somebody else that's doing what you're doing, but also you can talk to other people that have done what you're trying to do. So, you know what? I was where you are 2 years ago. We got 15 houses now. And
Sure.
share with you some potholes to go around. We have some ideas for you.
So associate with like-minded people.
Exactly. We put you in a oikos, a sphere of influence of other people that are doing the same thing you're doing. They have their own coaches. They can share with you what their coaches are telling you. So the access to financial expertise is just off the charts with our program. All right,
Okay.
so here's where we started. We're going to save you about $77K of interest and save you 21 years of stress, 21 years of payments. Now, let me ask you a question. Do you think our system sounds like it will allow you to achieve all those goals we talked about? You know, retirement is going to be sweeter, access to capital, knocking out the mortgage, leaving a great legacy, allowing you to travel if you want to.
Good. I love it.
Okay. All right. So you've got a couple of options. Option one is to do what I did the last time I had a mortgage. I stuck my head in the sand because I did not want to know the damage was being done to my finances. And I'm a numbers guy. I knew what was going on. I didn't sit down on a Friday night for fun and sit down and look at page 3 of my mortgage, the amortization schedule. I didn't want to know. So I
Right.
stuck my head in the sand. That is something you could do if you decided not to work with us. Option 2 is to work with us. We're going to take you through this. We're going to walk you up Everest, and we're going to say, jump over that crevasse. No, that looks like ice. It's not. Go around this way. We've seen it all. We've seen where all the things to avoid.
Mhm.
So let's talk about what it takes to get in. To save you 77K and get you a return on your investment of over 7, the retail fee is $99.97. That's just the retail fee. This gives you unlimited access to the coach and the bank list until you get this thing approved on your existing mortgage. We're going to get your line of credit approved. We guarantee we'll get you approved, qualified. The reason we can guarantee that is because we've done this 6,000 times over 10 years. We
Right.
know what your numbers look like. We know what the bank is looking for, and we know there's going to be a match. And if there's not, we will say, mea culpa, we made a mistake. We missed something, and we will refund your money less a couple of $100 on the credit card fee that we paid for you when you used your credit card to get into the program. But we don't do this very often because we don't need to. And if we did it often, we wouldn't be in business very long.
Right.
Again, this is only going to take about 4 to 6 weeks. That's all we're talking about. So we've got speed on our side. We've got the expertise on our side. But if you wanted to start doing this on an ongoing basis, we have one more program that you can look at. It's $79 a month to get continual access ongoing in the future months to the coach and the bank list. Because if you want to start purchasing other houses to get other income producing assets, you're like,
Mhm.
hey, coach, could you step over here just a minute, please? That was a really good experience we had with knocking out our existing mortgage. We'd like to use your skill set and your connections to help us make decisions on buying these houses and then getting them financed properly. Which bank should we use? Oh, stick with the bank we have now. Okay, that's great. Or no, you have another bank over here that might be better. I think it's invaluable for $79 a month to be able to get back on the calendar 6 or 7 times a month with the coach and just pay $79. To me, that's a no-brainer. But
Is that something we can enter into anytime?
yes, it's optional. You don't have to do it at all. But it's only for our clients that join us with the one-time lifetime fee. So if later on you say, you know what, Jim, I'm going to put this on hold because I want to wait 3 months to watch this work before I go out and start doing this again. Also, the second huge thing that we give you is access to our affiliate program. We give you a link that belongs to Michael and Tina, and only to Michael and Tina. And you can share that link with your friends, family, people at church, whoever you know. And you can say, hey, we're knocking out our mortgage in a fraction of the time, fraction of the money. If you'd like to see if you can get qualified, click the link below and good luck. It's not going to sound like to other people you're trying to get them to join Amway with you and be on your downline.
Right.
It's not going to feel like that. It's more like, I went to a great Italian restaurant last night and the desserts were to die for. They had great bread. The service was great and it was very reasonably priced, except for that restaurant's not going to pay you a penny. We'll pay you $1,000 for anybody that joins us through your link. And all you
Okay.
share that link.
So it's word of mouth advertising.
Yeah. And that's why it's so important to us. We'd much rather show up on a Zoom call to somebody that's been referred to us than somebody that just found us.
Right.
We're in a better position ourselves, and social media advertising costs us so much. We'd rather give $1,000 to Michael and Tina than give $1,000 to Michael Zuckerberg, because we'd rather get you closer to your financial freedom, because I think he's already at his financial freedom. Would you agree?
Sure.
Okay, so that's why we do this. And that's why we have this situation with this pricing the way it is. Now let's take price off the table, the money off the table. Does the system sound like something that's perfect for you?
It sounds like it's viable and that it will return that cost in a very short period of time.
Right. I'm glad to hear you say that. Now, when you said that, that gives me a lot of license here. Now I want to share with you 2 other prices we have. If you want to come in within 3 days, if you want to pull the trigger within 3 days, 72 hours, you can get a discount off of that for $2,000 for $79.97 if you want to do that. If you want to pull the trigger today we'll knock even more off of that and get you in for $59.97. Now, remember, you said, hey, I'm going to get this thing paid off even at the 10K. So I'm not using pricing to try to motivate you to do anything.
Right.
Right. So I just want to reward you and say, if you want to move quickly, you can. If you want to think about it for 3 days, you can. We'll even give you a $2,000 discount off the $99.97.
We've already thought about it for over a week.
So
we've sat around and had our little powwows and stuff and come to the conclusion that this offers us everything we've been looking for.
glad to hear you say that. Let me send you this link here, because what I can do, I'm on another call in 5 minutes. I'm going to send you this. I'm going to email it. Do you have access to your email there?
Yes.
Okay. I'm going to send you this link, and you can knock this out with a credit card, and we can get you onboarded today so that the coaches can start calling you probably this afternoon or maybe the latest tomorrow morning. Let me fix this little thing here.
Do you want me to call?
Because I can be out of the house. I'd rather them call you.
Okay, let me do this for you. I'm going to stop sharing. Did you want to take a picture of this screen for any reason?
Yeah, let me do that real quick.
No, because we're not paying that price.
No, you're not. You're not.
Okay.
Okay, now take a picture of this. This is my personal cell number, and my name is on it.
Hold on 1 second. His phone's slow.
Sure.
Okay, I've got to go to the restroom. I'll be right back.
Sure, sure.
I'm still here.
Can you, Tina, can you check the email to make sure you got the link okay?
Yep, I can.
Okay, I'm going to take this sweater off while you're doing
Oh, sure. My husband leaves the room. You start taking your clothes off.
that. Hey, you said you joined, so I'm going to give you a little show.
Yep, I got it. $599.7 payment link.
So as soon as you guys do that, just text me. In fact, just say Tina paid, and what I'll do is I'll go in the background of the system. I'll get everything unlocked for you so that the coaches will start calling you. Customer support will engage you, and we'll get you started as soon as possible. Does that work
Okay.
for you?
Yeah, we already went to. I already found the website for the training, and we already did all the free stuff for.
Good, good. Well, what this payment will do is unlock everything under the advanced. You'll go straight over to advanced on the far right-hand corner, right-hand side of that dashboard. And you
Okay.
can start going through the training there, and you'll be set and ready to rock and roll. So I've got another call I've got to go hit. Let me encourage you, Tina, please keep my cell phone number, keep my name in case the coach or the managers or customer support is not responding quickly enough to you. You can text me and say, hey, Jim, this is Tina. I need your help. Don't try to call me because I'm on back-to-back calls all day and all night. It got me swamped. But I will call at breaks, and I'll take good care of you. I'm your backup, right? So again, once you finish, just text me, Tina paid, and I'll get everything unlocked, and I'll let you know when it's all ready.
All right.
All right.
Thanks, Jim.
For your time. We'll talk to you later.
All right.
Thanks, Jim.
Bye-bye.
Bye-bye.